Picture this scenario. You're enjoying your morning coffee, scrolling through the news, when suddenly you discover that your annual tax bill is about to skyrocket by tens of thousands of pounds. Not because you've done anything different, not because you've earned more money, but simply because you happen to own your own home. This nightmare scenario could become reality for millions of British property owners if a radical new tax proposal currently being discussed in government circles gets the green light. What I'm about to reveal will shock you, and it affects far more people than you might imagine. We're not just talking about millionaire property moguls or wealthy investors. This could hit ordinary families, retirees, and hardworking people who've spent decades building their lives around home ownership. The implications are so severe that it could fundamentally reshape the British property landscape forever. The government is quietly considering scrapping both stamp duty and council tax. Now, before you get excited about potentially saving money, let me stop you right there. They're not eliminating these taxes out of generosity. Instead, they're planning to replace them with something far more punishing for millions of homeowners across the country. Enter the property value tax, a completely new approach that would hit homeowners with an annual charge based on their property's current market value. Any property worth more than £500,000 would face an annual tax of 0.5% of its value. Properties exceeding £1 million would be hammered with an even higher rate of 0.8% every single year. Let that sink in for a moment. This isn't a one-time payment when you buy or sell. This is an annual bill that arrives every year, regardless of whether your income can support it. And here's where it gets truly devastating. £500,000 might sound like a fortune, but in today's property market, particularly around London and the South East, this threshold catches far more ordinary people than you'd expect. Consider this. The average house price in London has already surpassed £660,000. We're talking about modest 3-bedroom terraced houses in areas like Croydon, Walthamstow or Barking. These aren't luxury mansions or penthouse apartments. They're normal family homes that happen to be located where property values have exploded over the past 2 decades. The real tragedy lies with homeowners who are asset rich but cash poor. Many are retirees living on fixed pensions of £15,000 to £20,000 annually. They purchased their homes decades ago when prices were a fraction of today's values. They've worked their entire lives, paid off their mortgages and planned their retirement around staying in communities they love. Their homes might be worth £700,000 or even £1 million, but that doesn't translate to liquid wealth they can access for daily expenses. Let me share a concrete example that illustrates the devastating impact. I know someone who owns a property in the southeast worth approximately £6 million. Before you assume this person is some ultra-wealthy elite, let me explain their actual situation. They're retired, worked extremely hard for decades, made smart financial decisions, and invested wisely when opportunities arose. Their home is beautiful, and they've certainly earned the right to enjoy it during retirement. However, their annual pension income falls far short of what would be needed to cover this massive new tax burden. When I calculated the numbers, this property value tax would generate an annual bill of approximately £43,000. That's more than double their entire pension income. There's simply no way they could afford it without completely upending their life. They would face an impossible choice: sell their beloved home, abandon the community where they've built relationships over decades, and relocate somewhere cheaper just to survive financially. But it gets worse. The government is also considering introducing a seller's tax alongside everything else. So not only would they be forced to sell because they can't afford the annual tax, but they'd also get hammered with another huge tax bill simply for selling. This creates a double penalty that punishes people for circumstances completely beyond their control. They didn't ask for property prices to reach these astronomical levels. They didn't demand that their home's value increase by hundreds of thousands or millions of pounds. Yet now they're being treated as if they've done something wrong simply because they happen to own a valuable asset. The problems extend far beyond individual hardship stories. This tax would create massive distortions throughout the entire British property market, with consequences felt by everyone, whether they own property or not. Think about properties currently valued around £450,000. Right now, these homes sit comfortably below the £500,000 threshold where the new tax kicks in. But property values don't remain frozen. They increase gradually each year due to inflation, local improvements, and market dynamics. What happens when a property currently worth £470,000 starts approaching £500,000? Suddenly, sellers have enormous incentive to keep asking prices just below that critical threshold. Why would any buyer pay £501,000 for a property when crossing that line means getting hit with ongoing annual tax bills? The result would be artificial price suppression for properties near the threshold, creating strange market distortions where certain price points become financially toxic. Meanwhile, properties already well above the threshold would likely see their prices pushed even higher. If you're selling a £2 million home and know you'll face a seller's tax when you complete the transaction, you'll want to maximise the sale price to cover that tax and still walk away with reasonable proceeds. This creates a perverse outcome where prices at the higher end get pushed up further, making the housing crisis even worse for people trying to climb the property ladder. The wealthy get wealthier, the middle class gets squeezed harder, and those at the bottom get priced out entirely. It's a recipe for economic disaster that benefits nobody except the Treasury's balance sheet. Then there's the regional inequality aspect, which might be the most absurd element of this entire proposal. Under the current council tax system, everyone contributes something regardless of where they live or what their property costs. The valuations are wildly outdated and the system isn't perfect, but at least there's some semblance of fairness in that everyone pays their share. But under this new property value tax, the burden would fall almost exclusively on homeowners in London and the South East. Up north, where property prices remain much lower, hardly anyone would pay anything. The average house price in places like Doncaster or Hull sits well below £500,000. Most properties in these regions are worth less than £200,000. Under the new system, people in these areas would essentially get free local services. No stamp duty, no council tax, and no property value tax either. But someone still has to fund local councils, maintain roads, support schools, and provide all the services that council tax currently covers. So who picks up the bill? Homeowners in expensive areas, that's who. You'd create a situation where people in high-cost regions subsidise the entire country, while residents of cheaper areas contribute nothing. Some wealth redistribution already happens through our tax system, and that's generally considered fair and necessary. But this takes redistribution to an extreme level that's difficult to justify on any rational basis. Why should someone living in a modest 3-bedroom house in Croydon be forced to pay thousands of pounds annually to fund services in completely different parts of the country, while their counterparts up north contribute nothing? It makes no economic sense and creates politically toxic regional divisions. There's also the fundamental question of fairness for people who've spent their entire adult lives planning for retirement. Most homeowners with valuable properties in London and the South East didn't purchase them recently. They bought 20, 30, or even 40 years ago when these properties cost a fraction of current values. These people made long-term financial plans based on the tax system that existed when they made their purchasing decisions. They worked hard, saved diligently, paid off mortgages, and structured their retirement around predictable expenses. They calculated pension income, factored in expected costs, and ensured everything would balance properly. Now, decades later, the government wants to change fundamental rules and impose massive new tax bills that nobody saw coming and nobody budgeted for. This isn't just unfair, it represents a betrayal of the social contract between citizens and the state. When you work hard, follow existing rules, and plan your life around the current system, you shouldn't have everything turned upside down at the last minute. This is especially cruel when you're in your 60s, 70s, or 80s and lack the ability to return to work and generate additional income to cover these unexpected costs. These are people who've contributed to society throughout their working lives. They've paid income tax, national insurance, VAT, and every other levy under the sun. Now in retirement, they're being told their lifetime of contributions isn't enough. The political implications of this proposal are enormous, and I genuinely believe that if Labour pushes this through, it could cost them the next election. Property ownership touches something deeply personal in people. Your home isn't merely an asset on a financial statement, It's where you raised children, celebrated milestones, built memories, and created the foundation of your life. The idea that government could force you out of your home simply because it's become too valuable will resonate emotionally with millions of voters. This won't just anger traditional Conservative supporters either. Plenty of Labour voters own property in London and the South East. They'll be hit just as hard as anyone else, and their reaction won't be pleasant. Better alternatives exist for fixing problems with council tax and stamp duty without resorting to such a blunt and destructive instrument. Council tax valuations could be updated to reflect current property values, but with bands adjusted to prevent people from facing enormous overnight bill increases. Stamp duty could be reformed to reduce burdens on first-time buyers, while increasing rates slightly on second homes and investment properties. Smart, targeted solutions could raise necessary revenue without destroying retirement plans or forcing people from their homes. But instead, the government appears determined to pursue this nuclear option that will cause maximum disruption and maximum pain for ordinary homeowners. The most alarming aspect is that this isn't speculation or rumour. Multiple credible news outlets have reported that this proposal is being seriously discussed within government circles. The Times has covered it extensively. The Guardian has written detailed analyses. This isn't some fringe idea floated by a backbench MP. Senior figures in government are actively considering this policy, and it could appear in the next budget. That means it could become reality much sooner than anyone expects. And once it's implemented, it will be nearly impossible to reverse. Governments rarely abandon new revenue sources once they've been introduced. If this tax goes through, expect it to stick around for decades, with rates gradually increasing over time as politicians look for additional funding. So what can you do? First, spread awareness. Share this information with everyone you know who owns property. The more people who understand what's at stake, the more pressure the government will face to reconsider. Public backlash works. We've seen unpopular policies quietly shelved after widespread criticism countless times. Second, make your voice heard politically. Write to your MP. Explain exactly how this tax would affect you and your family. Politicians respond to constituent pressure, especially with elections on the horizon. If enough people make it clear this policy is unacceptable, they'll think twice before proceeding. This represents one of the most extreme and unfair tax proposals I've encountered, and I've covered plenty of controversial policies. At least with other flawed legislation, you could identify some genuine intentions to address real problems. But with this property value tax, I struggle to see any upside for ordinary people. It punishes success, destroys retirement security, creates massive regional inequality, distorts property markets, and forces people from homes where they've lived for decades. It's terrible policy at every level and must be stopped before it becomes law. The fight against this proposal isn't just about protecting wealthy property owners. It's about defending the principle that people who work hard, follow the rules, and plan responsibly shouldn't have their lives turned upside down by arbitrary government decisions. It's about ensuring that your home remains your castle, not just another government revenue stream. Time is running short to prevent this disaster from becoming reality. The more people who understand what's happening and speak out against it, the better chance we have of stopping it. Your home, your retirement, and your financial security could depend on taking action now before it's too late.